talk more about this is Lee Everett. He's an executive vice president and head of research and strategy at Cortland. Lee, thank you so much for joining.
Thank you for having me.
A big Fed decision on tap this afternoon, so certainly a timely conversation as we watch the housing market. Tariff talk has grown louder, certainly out of D.C. What impact have we seen that have on housing?
I think we're seeing sort of a dual impact here at the moment. First off, you're seeing already a slight increase in costs of things ranging from appliances to various other items that are sourced out of China in particular and the Asian countries. There's also a lot of fear in terms of domestic tariffs, particularly with Canada and Mexico. It's estimated today around 30% of all building materials are imported from them, according to the National Association of Home Builders. You've seen builder sentiment drop recently, despite an increase in starts and an increase in applications. So I think we're kind of at a bit of a rosy period as people ride through the last of the unfirm policy decisions, if you will, and prepare for what is a much murkier future coming this summer.
Interesting. How much could tariffs, if they do rise from here, impact rates over time?
It's a good question. I think there's sort of three scenarios at play. One is if you avoid a recession and stay in sort of a higher growth environment, you're likely to see higher rates. Second is in a recessionary scenario, the Fed's likely to have to act and you'll see a lower rate base reset on the other end of the recession, which will materially impact housing affordability at that end. And then the worst case scenario would be sticky inflation in a low growth environment leading to stagflation, in which you would have both locked in rates but slowing and problematic economic growth.
Yeah. So from your vantage point, what is the most important data when it comes to looking at those long-term rates?
I think it's a combination of the PCE inflation index, what the Fed says, and generally consumer sentiment. There's a very strong link in housing demand between consumer sentiment and household formation.
Yeah. Tariffs, we know, could certainly increase the price of key housing materials like lumber, appliances, also from places like Canada, for instance. How does that impact the price to build a home?
I think it impacts materially. We've already seen most housing construction in this country start to move further out from city cores as home builders and multifamily builders have sought cheaper land in order to alleviate the high costs of today. Any increase in material costs is likely to continue to push a flight to cheaper land and cheaper tax bases to build.
Do you think that home buyers might shy away from new builds due to this domino effect that tariffs could carry?
We have seen new housing inventory beginning to build up. You're seeing the builders talk about a larger need for incentives. So you definitely could start to see that in the next 2 to 3 months.
You were talking a bit about multifamily and single family. I believe at Cortland you do focus on multifamily. So what trends are you seeing when it comes to those types of homes?
In the multifamily industry, we're coming off a record-shattering supply wave. We delivered over 1 million units over the course of the last 2 years, but what we've seen is a very sharp slowdown in starts, starting in late 2024. It's kind of stabilized now, but you are 100% seeing less supply preparing to come to market in 26 and 27.
Yeah. You know, housing affordability has been such a topic of conversation, whether you own, you are a potential buyer, or you currently rent at the moment. And so what does the rental landscape look like currently when it comes to multifamily?
The rental landscape, in addition to a record supply wave, had a near record demand wave over the course of 2024. So it's been robust. And what we've seen, truthfully, is a higher creditworthy and a higher income person more likely to rent today because of the difficulty of accessing the single family market. So we've seen good demand from people that can afford the higher rents today. Our rent to income ratios in our portfolio today are lower than they were before the pandemic, which is not something most people would expect or believe.
Interesting. So what would you advise a viewer watching who might be wondering what the best, most affordable decision for them is? Even what factors go into making a decision like that?
I think it depends on where you want to live. A shorter commute, an access to a better school district, you might either need an existing older starter home or to rent in a newer townhome type community, a single family rental that exists in that area. If you are a remote worker, you're fine living further out, you're more likely to be able to get good discounts today from the home builders in those more tertiary submarkets, if you will.
Interesting. Now, of course, the Fed decision on tap this afternoon. We'll get an updated summary of economic projections as well as comments in a Q&A from the Fed Chair, Jerome Powell, this afternoon. What is most important to you from a housing perspective? What will you be listening for?
I think it's his comments in terms of how he views the policy uncertainty we're looking at today. As you mentioned, tariffs can be inflationary. The question is, when does the Fed sort of start taking that concern into their own equation, if you will?
Lee Everett, great to have you on the show. Anything else our viewers need to know?
I think it's just important to stay steady through the uncertainty today. Find the place you want to live and be flexible in choosing that.
All right. Lee Everett is the Executive Vice President and Head of Research and Strategy at Cortland. We really appreciate it. Thank you.
Thank you.